Morning, everybody. It's Monday, May 6th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at July corn down a penny at 4.59 and a quarter. July soybeans were down a penny and a quarter at 12.13 and 3/4. And July Chicago wheat was down 4 and a quarter at 6.18 and a quarter. No export sales announcements here this morning, so we'll kick it right off. Dustin, good morning. I saw, last week's data showed that funds were net buyers of corn, quite a bit of wheat, and actually net sellers of a little bit of soybeans. So just wanted to get some initial thoughts on what we saw towards the end of last week, and then kind of what the prospects are for this week, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, we've been noticing, a little bit of a creep down in that beans corn ratio during that time as well. And, we also noticed like a lot of that was happening toward the close. So it may have been just some sort of structured fund covering, despite the fact that corn actually was lower from Tuesday to Tuesday when this COT report captures what the funds are doing. It's always in the rears. We get a 3-day lag. The report's released on Friday, but it's as of Tuesday's close. So from Tuesday to Tuesday, D's corn or lead month corn was down about 6 cents. Funds had covered about 20,000 contracts of corn though, and we noticed a lot of that improvement or actually drop in the ratio rather, where corn was doing a little bit better than beans, was happening near the close. So we made some new lower closes that we haven't seen for a while in the beans corn ratio and the new crop. And a lot of this move, the market in general is just a lot of it's driven by hedge funds and, how they're positioning, how they're changing. Of course, we're going to see the rest of the data next Friday or this Friday coming up of what they did later on in the week when we finally had that breakout in corn. But certainly some positive action that we haven't seen in a while. They're still very short, both corn and beans. They kept kind of a neutral bean number over the week. So that might explain some of the drop, the new lows in the ratio being made during that time frame.
That's good stuff. Ben, some thoughts here this morning as we start the week?
Yeah, market's kind of flirting with their 100-day moving averages. Soybeans just briefly below it. D's corn tested its 100-day overnight and held it at 477 and a quarter. We do have a report this week. I think it's probably going to be a report that maybe not be the bullish tailwind that we would like. But again, humility in these markets. I do think there's some frustration in general with COT and a lag. I would be pretty confident that Thursday, Friday last week, there was quite a bit of beans covered. And while beans fundamentally look to me to be really weak over the horizon, we have to deal with the uncertainty of whatever's going on in Rio del Sol, what the losses there look like, as well as I think that short becomes a lot more difficult for managed money to cover. Just because the grower's hand is not as burdened in soybeans as it still is in corn. 140, 150,000 soybean shorts versus a couple 100,000 corn shorts. If they do decide to cover, it might have a little more impact on the market. So just patiently waiting. You see the wheat shorts have been trimmed down quite a bit. Wheat kind of got this started. So we'll see how the market reacts with that, especially with, wheat harvest here, especially SRW, should start early. Nice dry weather after really good rains. That should be a good crop. So it'll be interesting to see if we can get some sort of, independent strength in corn, especially if beans can't manage to extend gains. So.
That's good. Justin, you mentioned before the start here, we've got kind of a 10-day window that appears to be drying out just a little bit. We kind of opened up a little softer last night, so maybe a little reflection there. But by all accounts, it looks like we'll continue to grind this thing out and get this thing planted. And, guys are getting, sufficient buildup in subsoil moisture in a lot of areas. So it's probably going to start out pretty good.
Yeah, I mean, kind of one things is a wet spring turns bearish at some point, right? As long as you get it planted, and 19 was the exception. And it's easy to look at that 1 year that we can all remember where it never got better, or not for a long time. But yeah, generally, if you're gonna get a window, you get it planted, things are gonna look pretty good. So I'm not sure that a lot of our rally has been wet spring. I'm sure there's obviously been some premium, but I think it's been Safrina, the short funds, just kind of a factor of things that hit the market, and technicals started turning up. And we talked about this, I think, last week or the week before, but a lot of times it's a lot of little things that you kind of push off as not important that add up into, kind of feeds on itself into a short covering rally. And then all of a sudden the people come up with fundamentals to justify the rally. So, this South American flooding, my guess is probably overblown with the impact of the actual rolled S&D for beans. But, it's just a factor. It's an unknown. Just like it is here, it's so hard to know what a weather event does here, let alone, South American state that's 70% harvested. We just see the pictures of the flooded cities, and you assume the worst. So for whatever the reason, it caused a lot of short covering. Soybean meal, for instance, went from a large short to a large long. And I think that triggered the bean market. The ratios Dustin talked about, it's really been stubborn. It makes a really bad trade, and then overnight it's trading back to 2.5 to 1 in the new crop contract. So kind of a battle going on with some of those inner commodity spreads. And I think, like Ben said, that's kind of fighting around moving averages, and it's kind of a technical game here going into a weather market. So, it's going to have, I think the volatility is just going to continue. So it can look really, really good and then fail like corn did on Friday. And it can look like horrible overnight and then close higher. So it's just going to be, I think we're entering this volatile time frame.
Right. No, that's a good point. And it was interesting too, because you look at, like you've referenced a number of times, the finish of the Safrina crop. They get another 10 days of real hot dry, and it doesn't seem to be gathering headlines, but it hasn't been a particularly great finish. And
I think that's a bigger fundamental to watch is how the Safrina corn crop ends, rather than the whatever it is, whether it's 1 or 5 or whatever million tons of flooded beans. I think it's going to have a bigger impact, especially when you have such a large discrepancy between where the USDA is and most private estimates in Brazil. I think there's upwards, more than 10 million tons discrepancy pretty easily there, and that could be growing as the weather has kind of a stubborn finish. So we'll see. Again, hard to know. We're not down there, but you can see, the lack of precip, and it's kind of the hotter period and the drier season that they're in. So it makes it harder to recover from droughts. So we'll see.
Sure.
So I'm not trying to make a giant story out of it, but if I had to put rank stories of importance, I think that's higher than the flooding that we just saw.
Yeah. One other interesting thing to note this morning is, it appears again that tensions are ramping up over in Gaza. Israel, looking to go after Rafah. They've alluded to it a number of times that they were going to when prepared. Ben, maybe a few thoughts there geopolitically, just on, once again, tensions rising. It seemed like things were easing off just a little bit, and now here this morning, they're dropping flyers telling everybody to get out, and we're coming.
Yeah, I think that the general cycle for both Israel and for Ukraine has been politicians giving us headline hope. We saw the hostage release negotiations and calling for a ceasefire, followed by ramping up of violent actions by one side. And I don't think that at this point Israel has shown any inclination to be deterred from what they're doing. And I think it will keep that region volatile, and you have to start looking for additional flare-ups in that part of the world, as well as the kind of the unrest we've seen in the U.S. And this is an apolitical statement, but Israel does not care, right? And that's going to keep going until they get their objectives met, and they can tell us all they want on the headline news and throw us hope, and trying to score some political wins, I think, domestically, and really falling on deaf ears of any move to tone that down. So
yeah, it should be interesting to see how that plays out this week. Rylan, we got a couple of minutes here before the open. Looking at livestock, saw news this morning, the Canadians getting a little tougher on import requirements for U.S. breeding cattle. So just, I'd say more soft headlines on this bird flu deal.
Yeah, absolutely.
Looking at last week, looks like hog slaughter and cattle slaughter up about 1%. So maybe just a few thoughts here as we start the week.
Yeah, and I think that was kind of the driver for cash. Cash has been really firm, but the futures obviously is still shaken up by the bird flu news. And it just, as we know, more these types of stories tend to snowball. And obviously there's been this kind of risk off mentality. I mean, the funds are still pretty long the market, but I would say that just historically they're carrying just kind of an average, maybe slightly above position for at this point with 33,000 contracts. So they've been kind of reducing exposure. Funds are still carrying a massive position in the hog market. They since reduced that a little bit, but they're still holding 85,000 longs as of last Tuesday, and that was after reducing 7,000. So I think that's something to really keep an eye on. And I know that the story is probably more centered around China, around some of our own domestic commercial productions reducing breeding herd over the past couple months and into this year. So I think that's kind of the story, but right now we're just not seeing that reflection on the hog side of the cash market. So I think that's something that all eyes are going to be on is if the pork cutout can't really muster any kind of seasonal strength, or at least struggles. These guys are carrying a massive position that if they decide to exit, could be pretty problematic for prices. And I think we're kind of seeing a little bit of that on the board just recently with the pretty steep decline that we've seen. So I think that's what we're looking at. I mean, otherwise cash is pretty firm. So, last week's slaughter kind of makes a little bit of sense, but we're not seeing the rally in beef, that we really want to see yet. So we'll see if we see some seasonal demand really start to uptick here. And cash is firm, but obviously the market is just going to be dealing with the bird flu situation, and I don't know if it really is going to translate to a big problem, or if the worst is behind us just from the headline standpoint. Most of this is priced in, but yeah, obviously like Canada taking their steps and requiring negative tests for imports, it's just kind of another nail in the coffin right now. So once again, just kind of keeping the eye open for any real kind of news that would affect the beef market in any direct way, but didn't see any of that over the weekend.
Well, very good. We'll keep an eye on that and be sure to check in, here the rest of the week. A couple things to note here today. Crop progress conditions will be out at 3:00 Central. So we'll get another update on our planting progress in addition to wheat ratings. And then we'll touch on it a number of times this week, but we do have a USDA report out on Friday. It'll be 11 Central. And we will have a war room reaction to that report. So look forward to that as well.
Yeah, Dan, I was going to add one thing just while you're
Sure.
talking. We were talking about planning progress, and I think, my comment about, I don't think there's been that much weather premium in there, for kind of a wet season, because we all know we can plant really fast now.
Mhm.
Now, I will say in the next 2 weeks will be really, really important, right? So if the dry forecast doesn't happen, usually you want to be hitting that 70% planted mark by, third week of May. That's only 2 weeks away. So, devil's advocate there, it hasn't mattered yet. And I think everyone's been pretty patient. You fast forward and the 2 week window starts looking, wetter again or something like that. I would think the market starts getting uneasy quicker and quicker every day here. So that's just the, flip side of the coin, on the wet weather. So it can, that's the problem with the volatility. It could be such a bullish or bearish thing on all the rain that we did just get, depending on how we finish here the next couple of weeks.
No, I think that's a great point. And it's interesting too, because even like, Northwest Illinois, where we're kind of centered, you go 30, 40 miles and there's a lot of different progress being made in certain pockets. So it's just you'll hear more and more about that, as to your point, Justin, we get into the next 2 to 3 weeks, right?
Yeah. If you get into replant season, if it keeps raining and a lot of guys that got stuff in early gets drowned out, so market can get grumpy quick in this, this time period. So, anything, I think you gotta be pretty open-minded.
Yeah, it's good. Good point. We just came into the open here. July corn now up a half. 461 is the last. July soybeans are up 4 1/4. 12.19 1/4 is the last. And July Chicago wheat's down to at 620 1/2. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate everybody's thoughts and comments this morning. We look forward to talking to you tomorrow. Have a great day.
Thank you.
Thanks, Tim.